I am very excited to welcome Andy Schectman back to the show as the world and the nation descends further and further into chaos. Welcome back, Andy.
Elliot, it's great to be here, buddy. Sorry I have to do it this way on audio, but as we had talked about, I am sponsoring Bix Weir's road show throughout California and have a meeting with him this afternoon in San Diego, your neck of the woods. So don't have my normal accoutrements with me, enabling me to get online and do this audio, but nonetheless, it's important. Lots going on, and as always, it's great to be with you.
It really is. And, part of why I enjoyed these calls so much is because so much of what we talk about has seemed to come true. I mean, for instance, we talked about how Russia and China were dealing in Yuan for oil a few months before the invasion. Then we talked about the joint military exercises. And now all of a sudden we have a collapsing Russian economy, a war, and China's uniting up with Russia. We have a Saudi Arabia situation. We talked about de-dollarization. And just on CNBC today, there's this headline, which I want to get your take on. China's digital yuan could challenge the dollar in international trade this decade. What is your take on de-dollarization?
It's weird when so much of the stuff that I've been hypothesizing has come true. And look, I'm not a genius, but you just put the dots together, connect the dots, and you can see. So, let's take it one by one. You said a little bit there. First of all, when you look at the Chinese digital yuan, it is a currency that is being rolled out to 75% of human population in the New Belt Road Initiative, connecting Asia and Africa. The majority of all of the contracts are settling in the new digital yuan. So you're indoctrinating literally 45% of global GDP before industrialization of Africa and over 75% of human population into a new currency that is, I think, ultimately going to peg itself to gold with the immutability, the veracity of the gold being held, the kryptonite to government inflation being held on a distributed ledger. And I think ultimately that is what will challenge the dollar for world supremacy, will be the ability to peg the new digital yuan to gold. Remember, when you talk about Russia and China, you're talking next to the U.S. If supposedly our 83 tons of gold are still at Fort Knox, which hasn't been audited since 1956, if it's supposedly still there, you put China and Russia together, they have, secondly, probably the most gold in the world, maybe more. I mean, there are people who surmise, like Alistair McLeod, that China has as much as 4 times the gold that we do because they're the largest importers, the largest accumulators of gold in the world, and they don't update their official holdings very often at all. But bottom line is they have an awful lot of gold and a history of embracing gold as wealth. When you talk about the petrodollar issues, yes, I mean, look, you have the Russia signing the contract with Saudi Arabia and Nigeria for joint military cooperation. Now, this is a very big deal. We talked about that at length a couple of months ago. This happened in September when we left, right after we left Afghanistan. They signed a contract for protection of the Saudi kingdom. It is the protection of the Saudi kingdom that has given the dollar its petro status, its world reserve petrodollar status. It's the protection of the Saudi kingdom. And so, to me, surmising that Saudis may open up for oil purchases in other currencies is quite realistic when you see Russia signing contracts with agreements with both Nigeria and Saudi Arabia. And the handwriting is on the wall. If you can't see that, you're crazy. There's no other reason for them to accept protection from anyone but the U.S. if that wasn't ultimately a card that they were willing to play. And just today we see in Zero Hedge that now Saudi Arabia is contemplating receiving yuan in exchange for their oil purchases. Now, one of the things that China has done along the way is to create the Chinese petro-yuan bond. And the Chinese petro-yuan bond is what they have been using as well for payment in oil, because that bond is immediately convertible into gold on the Shanghai Gold Exchange. And this is why the Shanghai Gold Exchange has delivered roughly 90 times more gold than the U.S. COMEX market is. So, if the Saudis wanted to ultimately receive gold for their oil, it wouldn't be so hard to accept the petro yuan bond and immediately convert it into gold. So those options to me are if I'm China or if I'm another country like Iran or Saudi Arabia, they all seem better to me than accepting U.S. dollars. And I think the handwriting is on the wall, and I think it is the biggest issue to face the U.S. dollar, the U.S. dollar hegemony, the world reserve status, and this country, period. And yet our media does a ridiculously poor job of talking about it, and they're more concerned about other idiotic woke things that allows global macro trends to be reshaped right in front of everyone's faces, and no one will catch it. Nobody, except for people listening to our show here, Elliot. But most of the public has no idea that we are really on the pivot point of losing our world reserve status, and this is the very beginning of it.
Yeah, it's the biggest story anyone could be talking about because it is so impactful on so many different levels. So it's kind of the scenario you're seeing right now is that China supported Russia's invasion. Obviously, they wouldn't have really done it without China's, at least discussing with China. And with that going on, you have an alliance with Russia and China. They're going to pull in the Saudi Arabia, and now they own pretty much like a huge majority of the world's resources. They have Iran, and then I guess it's just going to kind of be a snowball, and they're going to gather together an entire Eastern bloc, which can easily challenge the United States reserve currency. Is that kind of how?
Correct? Yes, that's right.
Wow. And why wouldn't China do? If we're talking about it, do you think they've talked? Why wouldn't they do that at this point?
Well, of course, when the hubris of the U.S. government to be able to inflate away the dollar while holding interest rates artificially low, and expecting the world to take their dollars and their treasuries is asinine. In the respect that we are destroying the value of the dollar and offering nothing in the way of compensatory interest rates for that loss of purchasing power, and we expect the world to give us their commodities for what amounts to a piece of inflated paper that is inflating away to its intrinsic value, that's zero. And I think the world has caught on. It was one thing when we backed our currency by gold. It was another thing when we ran a semblance of, a prudent monetary policy where, we didn't run massive trade deficits and we didn't openly massively inflate to the tune of, over 50% of every dollar ever created in the last 2 years. 50% of every dollar ever created in the history of this country in the last 2 years. So, it's I think equally as naive to not expect something like this to happen. And all we are doing by pushing the Russians into the arms of the Chinese is hastening the demise of the dollar. And look, the bottom line is this, Elliot. A global reserve currency is supposed to be for everyone to use, not who the leaders decide can or can't use it. And the unintended consequences of kicking the Russians out of the SWIFT system, I think, will reverberate for generations. And that will be pushing or hastening the speed at which the dollar is no longer viewed as the singular world reserve currency. And in fact, it will, I believe, plant the seeds for other currencies and other systems to come up and challenge the dollar for its singular world reserve status.
Exactly. And so that's why you have the Chinese Belt Road Initiative connecting Africa with the Middle East, including India and Russia. And now there's this big challenger to the US, which is unfortunate for the West. And so what is the US's kind of recourse here? Are they going to ally with Europe? How do you think this plays out? Because it's a kind of a hot mess.
I think it's kind of one of these deals where I view the U.S. becoming more and more isolated ultimately. And I don't know. I have a feeling that you'll see a good portion of Europe sign on to the Belt Road Initiative as well. I really do. So,
Wow.
friends and alliances aside, I think what you are witnessing, the Belt Road Initiative, I believe, is going to be it is mostly going to be used, Elliot, for global commerce. That's really what it is being used for. In fact, the roads and the railways and the maritime channels are going to be patrolled by military and also used by commerce. So it's not going to be used for people to go driving down the Belt Road. It's going to be used to, I think, industrialize a good portion of the world. And so at this point, the U.S. is completely out of it. So what is the U.S.'s response? I don't know. I think we've become increasingly isolated. And, here's your great reset. When this happens, you're going to see interest rates go to the moon because everyone dumps dollars, because it has been the foundation of every other currency really for since 1942. And so when you realize all of those dollars are out there that come home as other countries dump them in favor of other things, other currencies, other ways of buying oil, other ways of conducting business that isn't in settlement of dollars, you will see a nightmare scenario here where massive inflation at a time when we really can't afford it, as that we already have high levels of inflation. But that will mean massively rising interest rates. And when that happens, because when you see more and more inflation, interest rates have to rise to give compensation for the loss of purchasing power. That's just natural. That's just the natural inverse relationship between inflation and interest rates. But when that happens, as I've said all along, the three pillars of wealth in this country are obliterated: stocks, bonds, and real estate, all at all-time highs, and all inversely correlated to that rise in interest rates. So, if you think it's crazy and bad now, if something like that were to happen overnight, people would understand why we've been talking about gold and silver as wealth and not as an investment. And it's very hard for people to suspend their imagination to this level, because for the last 4 generations, we've all grown up expecting to live better than our parents did. It was our birthright. And I think those times are coming to an end. I wish I wasn't so pessimistic, but there's a fine line these days between realism and pessimism. And I don't think it's ever been more razor thin, that line. And for people not to wake up and see these trends that are happening and the possible implications, leaving all of their wealth in dollars and, worse yet, in stocks and bonds and real estate, there will be an awful awakening when it happens. And I don't take glee or pride in being right so far with what I see coming. I mean, it kind of freaks me out a little bit that it is happening the way that I thought it would. But if the switch is flipped and the U.S. dollar loses its singular reserve status as a result of a shift out of the petrodollar to something else, yeah, I think that you're talking nightmare scenario where, people lose 70, 80, 90% of their wealth. I'll give you an example. If you saw interest rates rise just enough to be commensurate with inflation at 8%, that would be a over 80% kneecapping of the bond market, which would overnight blow up the stock market. I mean, absolutely destroy it. And if you have 8% on the federal funds rate, which, by the way, real inflation is closer to 15% when you factor in food, energy, and housing, which is excluded from the CPI measurements. But at 8%, if you had 8% inflation, which, according to the CPI we do, and 8% on the federal funds rate, you'd have 11 or 12% on 30-year mortgage. Imagine what that would do to the real estate market. All three pillars of wealth blow up, and in spectacular fashion and immediately. And at the same time, the dollar crashes. So money in the bank, gone. 401ks blown up. Real estate portfolios decimated. Bond portfolios decimated. Where do you think all the money is held by the pension funds? Decimated. What do you think about your insurance policies? Blown up. I mean, it's your great reset. It really is. Everything blows up. Everything except for gold and silver. Everything blows up in that environment because of messing with Mother Nature and keeping interest rates artificially low and pumping money into the system has fostered speculation and malinvestment and distortions in prices. And when that changes and when Mother Nature gets her way, it will be like taking the Monopoly board that you've been playing all day with your brothers and sisters. And you're in last place, and you take it and realize you're screwed if you don't just lift the board and shake it and throw it in the air and start over. And that's about where it is. I mean, it really is if we see that moment of an announcement where the dollar is no longer viewed as the singular petrodollar vehicle that it has been since 1974, when we struck a deal with the Saudi kingdom to protect them. And since that point, oil has been almost 100% valued in dollars globally. You're beginning to see the end of that. And when that happens, it'll be a whole lot easier for other countries to dump dollars in favor of anything else that they like better than the U.S. And that's when things get really funky.
Yeah, it's a really bad situation. You mentioned monopoly. I'm thinking like Risk. So
Yep.
if this Eastern Bloc controls the Middle East and all those resources in Asia, I mean, and they also don't they hold the energy supply of Europe kind of like dangling over Europe. So if they just pull that, Europe's kind of done. They'd have to use American exports, which gas prices are rising here too. So there's just a shortage. And so do they have that as kind of a negotiating tool with Europe saying, look, if you join us, we'll actually give you energy resources? It seems like they kind of hold some sway over Europe, which, like you said, a lot of Europe might join that group too.
Yeah, well, I think it most certainly is. And here again, when you talk about unintended consequences, when you cut off the the U.S. independence on oil, you focus in other areas of energy. And look, Russia is the largest exporter of natural gas and the second largest exporter of oil in the world. We don't hold all the cards, and I think that's the hubris, the kind of the Achilles heel is that of the U.S. of their political views is that it will be very easy, and I maybe easy is the wrong word, but I think it will become very possible for if you see an alignment between Russia, India, and China. They don't need the U.S. They don't. There's enough people between those three countries to and the rest of the BRICS nations to really challenge the dollar hegemony. And in particular, you talk about natural resources. Russia holds the majority of all the fertilizer that they I don't know exactly what ingredients go into making fertilizer for farming, but they hold the majority of it. And so you're talking about China holding the majority of all the rare earth metals for making batteries. I mean, they have not only the commodities, they're superpowers in terms of military. They have huge numbers. They hold more gold than anyone else in the world, probably more than the U.S. The handwriting is on the wall. It truly is. And I think that when you see an article in Zero Hedge saying China mulling or Saudi mulling over accepting Yuan for oil, it truly is chapter one of the end of the dollar. and that book. And I suggest everyone take that very seriously and reposition yourselves. If you are solely invested in dollars, you're destined to go broke, period, if something like that happens. And it will happen faster than you can react. And that's why you must be proactive. There is no time for reaction in this type of a macro event. It will be you wake up Monday morning to a new reality.
We're going to have to stay on top of these updates with Saudi Arabia in the coming weeks, because that, you're right, that is an absolutely massive development. How I think they even snubbed Biden's planned visit to Saudi Arabia. So just the fact that there's cooling of sentiment there is very serious. So we'll stay on top of that. So, and as CEO of Miles Franklin, you have probably the most insight into this, into the supply demand fundamentals of the physical gold market and silver. I would think that in this environment, it would be fireworks in this space. What are you seeing in the physical metal arena right now in terms of demand?
The demand is so far detached from the price, it's unbelievable. The demand is unlike anything I've seen in 33 years of business. We're doing as much business in a week as we typically do in a month. Getting and keeping product in stock is becoming incredibly difficult. I've been on record for the last year saying that the market would define itself by an inability to source product. And I truly believe that day is coming, and coming fast. I would simply say to you that the demand globally is, not just here in North America, is making my job very difficult. We have 2 full-time employees that spend all day trying to secure product. One employee works in the middle of the night dealing with South Africa and Australia, United Kingdom, and Austria. One employee spends all day working on North America, the refineries, the U.S. Mint, the Canadian Mint, the U.S. distributors. And getting product and keeping it in stock is becoming our biggest challenge. We used to be able to buy stuff in the 24-hour notice, and it would be in my warehouse 2 days later, shipped. Now we have to buy things 6, 8, 12 weeks in advance, pay huge premiums, hedge it the whole way, pay up front the whole way, and run logistics literally across the ocean. Once it gets there, we have to run trucking logistics. It's a whole new ball game, and it's because it's not just a North American phenomenon. You have inflation in the United Kingdom at the highest it's been since World War II. You don't think they understand the importance of moving away from fiat currency? You have highest inflation in Germany in over 30 years. You don't think they realize it? You're seeing globally I think an awakening to the perils of fiat currency, and so it's more and more money chasing a finite amount of product. That's price inflation right there. You're seeing premiums rise, and you're seeing huge difficulty getting product. In the past week since the Ukraine invasion, premiums on Silver Eagles have gone up 50%, 50. Getting Gold Eagles and Gold Buffaloes has become much more difficult. And I'm a U.S. Mint primary one of 24 U.S. Mint primary authorized resellers. And so, it's crazy, Elliot. And I think people who are waiting for a pullback in metals will find massive premiums, huge delivery delays. Go to any of your local coin shops and you'll see what I mean. No one's got anything. Hard enough on a company like mine that will spend millions of dollars months in advance, hedge it, and run logistics, and it's that hard. If you are a local coin shop, you probably have next to nothing in stock, and just are buying what few people sell anything to you. So yeah, I think it's in my world as big of it's that same petrodollar moment for the U.S. dollar. That's what it's like for the precious metals industry, where getting and keeping product in stock is next to the most difficult thing that I've ever had to do in 30 years of business.
Wow. Is it true that the Mint delayed its sale of American Eagles until 2023? I heard something like that.
I don't think that's what they did. What they did is they suspended their Morgan and Peace Silver Dollar program until 2023. they've been the model of inefficiency on just about everything. And they fall back on social distancing and COVID mitigation as their rationale for it. But I'll put it to you this way: when you see premiums on Silver Eagles, every company in America north of $11, $12, that just should tell you that they can't keep up with demand, that they are completely inefficient and not able to keep up with the amount of demand that is out there.
Wow. Well, good for all the people that are actually buying now and taking advantage of this arbitrage opportunity, because the reality is detached from the price and the fundamentals. You have an opportunity of taking advantage of the inefficiency in the market, or at least the manipulation of the market. So where can people go to buy metals from you if you have any in stock?
I would have them certainly send us an email at info@milesfranklin.com. Mention the early stage investor, and we will make sure that your listeners get the best price in the country. If they would like to ask me any questions directly, Andy@milesfranklin.com, and I will respond personally. And we'll just make sure that your listeners get the best price in America. And we do have stuff in stock, but it's what is in stock today very often isn't in stock tomorrow. So give us a call. We'll send you an email with current inventory. Our new website is less than 30 days, I hope, away from being done. That will enable some online purchasing. Until then, give us a call. We will email you, or send us an email rather, and we'll email you back a current inventory with pricing and answer any questions that you have attached to that email.
This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.